Disclaimer: I do not own any shares in this company, and this is not financial advice, only for entertainment purposes. This video will center around two outliers in the e-commerce world. These two companies have existed for a while, but against their giant counterparts, they are tiny in comparison. These two giants being Amazon and Alibaba. Amazon and Alibaba are both dominant in their domestic markets, and they have expanded and are starting to dominate other markets as well. Now we'll analyze both of these companies, CPNG and JMIA, underdogs and competitors, and find out how will they defend their hometown growth and beat out titans such as Amazon and Alibaba at their own craft. First, we'll start with CPNG.
This morning, possibly could be the biggest IPO of the year. South Korean e-commerce company CPNG filing for an IPO. It's going to be listed under on the New York Stock Exchange under the symbol CPNG. You might remember CPNG. I ended up profiling them when I was out in South Korea, and then we had...
CPNG was founded in 2010 by Bom Kim, a Harvard dropout. Over the next 10 years, he would grow the company into the #1 e-commerce company in Korea. With 24% market share, it's a #1 and looks like it will continue to stay for years to come. Let me start by explaining the business model. Most of you know of how e-commerce works. With a website or mobile app, you order it and the company will get the product shipped to your door. Pretty simple. This is where CPNG differs a little bit. CPNG's main business model is e-commerce, but they also have other side businesses including CPNG Eats, which is a competitor to Uber Eats, to name one, but there are many more. Let's get to their main business and what separates them from Amazon. The main advantage CPNG has over Amazon is their free one-day delivery. This is capable through their vast distribution network that makes Amazon look tiny in comparison. They have over 15,000 drivers that are paid by the company, as well as over 100 fulfillment centers in over 30 cities, in total encompassing 25 million square feet. They offer hundreds of millions of SKUs while keeping the prices low and costs low for the consumer. Another main reason they would be used over any other competitor in Korea is their dawn and same day delivery, meaning if you order before 12 at night, the latest it will arrive is by 7 a.m. in the next morning. Now on some reasons they seem poised for growth. For the last 3 years, including 2020, they have had over 90% year-over-year in revenue, from 900 million in 2018 to 3.8 billion in 2020, and that doesn't seem to be slowing down. They had gross profits of 2 billion in 2020, up 92.3% from 2019, and their net losses shrank by 100 million from 600 to 500. Their net operating margin also improved. So these are all great for the company, and the fact they had 90% pre-growth rate per pre-corona is a good sign for post-pandemic growth. Now onto the total addressable market. They have had low penetration in overall retail space of Korea, with the market being worth around 470 billion in 2019 and expected to grow to 534 billion in 2024. The e-commerce spend expected to grow from $78 billion in 5 years. But this is all just in Korea, and with the CEO claiming in an interview that he'd be willing to take the business model outside of the country the next decade, I think this can flourish Southeast Asian countries as well, and that is some good news for long-term growth. Now, this is all information about CPNG or their market, but this is my thoughts. I think this company with a total addressable market of 534 billion and 206 billion in e-commerce alone means it has not penetrated much in terms of revenue. This means it has a lot more market to go through. This, coupled with the current share price of 49.39, giving it a market cap of 74 billion, means there's definitely meat on the bone. With an estimated PE ratio of 42, even though it's a bit overvalued by that ratio, with the growth rate, it is justifiable. I would wait for about a month and a half to let the IPOs sort out the price and then buy in near issuing price if possible. Next up, the African outlier, JMIA. They are an e-commerce / multifaceted platform for the African market, and they provide payment, shipping, distribution, and e-commerce for the African marketplace. They are the leading e-commerce platform for Africa, and they have dominated the market. Their three main businesses are JMIA Marketplace, JMIA Logistics, and JMIA Pay. These three integrate together to form a cohesive unit that can satisfy the end user. Now let's get into the nitty-gritty. JMIA Marketplace, by a numbers perspective, has 6.8 million active users as at the end of 2020, and they are continuing to grow. They have over 110,000 sellers on JMIA, and that number will keep growing over time. with marketplace revenue hitting 94 million in 2020, as well as 27.9 million orders versus 26.5 million orders in 2019, then we see an increase there as well. Gross merchandise value, or GMV, shrank from 1 billion to 800 million, which isn't great due to the fact that Jumia takes a commission on every transaction. But this is justifiable considering the fact that they were investing major amounts of money into logistics and hence they didn't pay a lot in advertising. So that means that they were going to have less orders and less merchandise going through. Also, they had a redistribution of how their sales went, with phones taking up 58% in 2019 to only 49% in 2020, and that's shrinking further down the line, which is great news for Jumia because over-reliance on one product category will mean it will hurt their business in the long term. Jumia has grown active users for the last 5 quarters, which is good, and this means they will have customers to buy their products so they can make fees through their different avenues. Moving on to Jumia Logistics. Jumia Logistics is a second arm of the business and consists of all logistics involved in shipping packages for third-party sellers. This works through integrating with other logistics in the parts of Africa that the package is going to, and to form a cohesive unit that takes advantage of whatever already exists. Jumia can avoid what Amazon is trapped by, and that is last mile delivery. And this is by giving that part of transport to their other logistics partners. They cover all parts of the logistics chain, from warehousing to transport to last mile to tracking. And this is the most important thing about the logistics division is the fact that in 2020 it is opened up to third-party sellers, which wasn't previously, which means that they can charge fees and commissions on those third-party shipments, making them more revenue in the long term. Now on to the final part of Jumia, and that is Jumia Pay. It is a way to overcome the challenges of the African financial system by providing an e-wallet to users that can store, receive, and spend money using their mobile devices. It is estimated that 91% of Africans own and use a mobile device, meaning that Africans can get Jumia Pay and use them for their day-to-day life. Now on to some numbers. Transaction volume increased 58% from 2019 to 2020, also known as $196.4 million in 2020. Transactions in total increased from 7.6 million in 2019 to 9.6 million in 2020. The use of Jumia Pay on the Jumia marketplace increased 15% in that same time. They don't actually use their own e-wallet per se, rather leaving up most of that heavy lifting to MasterCard, who they signed a 10-year deal with to provide that service. They also provide financial services to their sellers through third-party financial partners. These are all services and partners that they signed up with to provide services to their consumers and customers to make the end user feel happy. Some risk factors for Jumia are mainly in the low spend for e-commerce relative to other areas of the world, and more importantly, political instability in the countries they operate in. These are risks as the region and not specific to e-commerce, but one should be aware of. Particularly to the political instability, the country that Jumia is housed in, Germany, is not really prone to political instability, but the countries that Jumia operates in have been known in the past to have political instability, meaning that is a concern that investors should be aware of. Jumia, by their own words, will be cash flow positive, i.e. profitable by 2025, and will continue to grow from there. With a total addressable market of 40 billion in 2025 and a penetration of only 27%, meaning there is a large runway to go and large space to fill for Jumia. With average revenue per user expected to increase to $74 US at that same time, meaning there's more revenue to go around, meaning more money to get for the end user, for Jumia as a whole. In my opinion, with all of this known, I believe that Jumia is a leading factor for the e-commerce movement in Africa will continue to ride that wave into the future. They are a much smaller company when compared to Coupang in South Korea, but still their presence is known and should be thought of when investing for the future. Now, if I was going to pick a company in the e-commerce space to invest in, I would choose Coupang out of the two. They have great management and will continue to succeed in the future, even with an overvalued market capitalization at the moment. I feel like with a nice pullback through tech, they should pull back and they should be able to pick up some shares at a good price and ride into the future. The main advantage that Coupang has is a disruptive business model through the use of their own drivers and their own logistics in that regard, and that means when expanding to other regions they can take that with them. They will expand outside of their own market in Korea and move to other SEA countries and dominate those as well, making this a good investment in my opinion for the long term. So this wraps up my video on Coupang and JMIA, the two e-commerce outliers that are dominating their own markets and looking to expand and further to dominance. I chose Coupang due to the fact that Coupang is the market leader in Korea and looks like it has the better management out of the two to succeed and climb into the future. If you like this video and want to continue with this investing content, please hit those like button and subscribe. It'll be great for the YouTube algorithm. Also, if you feel like you enjoyed this video and you want to see one more, I'll have another one coming out very soon on Shift, my biggest investment in my portfolio and the one I have the most conviction in. So until then, have fun investing, be awkward, and stay awkward.